TikTok next block. While the crab market continues for now, we are hurtling full speed ahead towards the halving and what I firmly believe is the official start of the next 4-year cycle. While events in Israel have dominated social media since Saturday, there has also been a lot of scuttlebutt about prices and whether this time is different. I want to say this sort of thing happens every cycle. The hardest time to hodl, besides during an epic liquidation dump, is right before the bull run starts. This is not unique to Bitcoin, hence the saying, it is always darkest before the dawn. However, I don't actually like that metaphor when it comes to Bitcoin right now because I see plenty of light at the end of the crab market tunnel. In fact, I don't actually like the term crab market because in reality, this is an opportunity that in hindsight we always refer to as the accumulation phase.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, Sat Stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. Today is Wednesday, October 11th, 2023, and of course that means it is DCA Wednesday. Before we get into all of that, as I mentioned in the intro, there has been a lot of worry on Twitter, or X, I still refuse to call it X, and on Reddit, our Bitcoin, etc., about, quote, why the price isn't higher. Despite Adam Back's bet that Bitcoin would be worth more than $100,000 before the halving, that would be an example of this time is different. Bitcoin actually usually goes down a bit right after the halving. Probably because of the false idea that the bull run kicks off immediately after the halving. I want to remind you, so far, this time has not been materially different. We are almost exactly where we were at this point in 2019 during the previous halving cycle. And even if you're worried about a recession black swan or a war as a black swan, remember, and I've said this before multiple times, a month or so before the last halving, the entire world ground to a halt. Schools and businesses were ordered to close, and people were even locked into their homes or in isolation camps in many cases. And as a result, the stock market plunged and Bitcoin dumped as low as about $3,000. Of course, Bitcoin recovered well before the stock market did. It was extremely short-lived, and 6, 7, 8 months later, we were setting new all-time highs. This time is only different if we don't get another black swan dump, it would seem. Before I get into any more of a rant, though, let's take a quick look at the vital statistics. As I mentioned, today is Wednesday, October 11th, 2023, and that means it is DCA Wednesday, and this is going to be our 116th DCA stack. Currently, at the time of recording, we find ourselves at a Bitcoin block height of 811,759, and Bitcoin is ringing in at a US dollar price of $26,775, or a rate of 3,735 sats per dollar. Now, I alluded to some of the scuttlebutt on social media about why the price isn't higher, and I even got into it a little bit with a couple of fairly well-known Bitcoiners about why I was excited that the price was low, and I was criticized basically saying, well, that must mean you either didn't go all in or you dumped. Without getting into my Bitcoin journey, I think if you've been following me by now, you know that I'm no OG. I didn't get into Bitcoin as soon as Satoshi Nakamoto by any sense of the imagination, but I also got into it a little bit differently than a lot of people. I got into Bitcoin because I was interested in the freedom money aspect of it. It never even occurred to me that Bitcoin might be worth $1,000 or $20,000 or $1 million one day when I first heard about it. In fact, when Bitcoin hit dollar sat parity, I thought that's a big deal. That was officially Bitcoin's moon. When it was on par with the dollar, that meant it was being taken seriously, and that the chances of it failing, getting squashed, or going away were pretty much over, in my opinion. That is neither here or there, though. To continue on with the statistics, the current block height puts us 28,241 blocks away from the halving. As you know, the miner reward that miners receive for finding the next block, in addition to mining fees, is cut in half every 210,000 blocks until eventually every new Bitcoin is issued. The next halving is going to occur at block 840,000, and that is currently looking like that's going to be on April 21st of 2024. That's been pretty consistent the last several weeks, so sometime probably in late April of 2024. The only thing that's really set in stone is that it will be at block 840,000. What is different this time is that this is going to be Michael Saylor's first halving and MicroStrategy's first halving. Remember, Michael Saylor started stacking personally and for his company MicroStrategy going into the epic bull run. It was significantly after the halving. I don't remember what their average purchase price is, but it's in the $20,000 range, which up until that halving was higher than Bitcoin had ever been before. So there's a lot of people out there. There's billionaires out there in a little hand-sized measuring contest that when they see Michael Saylor stack, rapidly advance him into the ranks of one of the richest men in the world. That's the kind of jealousy that could kick off billionaire FOMO. And of course, businesses, especially with the change to the GAAP accounting procedures that let MicroStrategy revalue its Bitcoin holdings at whatever Bitcoin's fair market value is, instead of making them mark it down as if they were losing tons of money, based on whatever the lowest value of per US dollar Bitcoin has been since they purchased it. Other companies are out there watching, just like other nations are watching El Salvador, who's getting ready to head into their first halving as well. If there is anything that would lead to, a super cycle or a this time is different, if anything could jumpstart hyper Bitcoinization, I don't think it would be the ETF. I think the ETF would help more normies pour money into Bitcoin in a non-custodial way, in a manner that really isn't fitting in with Satoshi Nakamoto's vision of Bitcoin being a peer-to-peer currency. But it will increase the price of Bitcoin. But what will really jumpstart hyper Bitcoinization is nation-state FOMO. When Michael Saylor is vindicated, when MicroStrategy is vindicated, and when El Salvador is vindicated, other players will see that and they'll want to join in. And that's just human nature. There's, that's almost as guaranteed as they say, death and taxes. But I digress. Continuing with the vital statistics, Bitcoin's current price puts it at a market capitalization of $522.4 billion. That is $17.9 billion less than last week, but still $9 billion more than it started the month of October at. As you know, Bitcoin's been kind of in the mid $500 billion or lower $500 billion range for months now. Obviously nowhere near as high as when Bitcoin had a market cap of over $1 trillion. But, we'll get back there. As soon as Bitcoin sets a new all-time high, it will obviously set a new all-time high in market cap terms as well. And I know most of you, or a lot of you anyway, don't really care about market cap anyway, because, it's kind of a fantasy number. Obviously, if everybody dumped their Bitcoin all at once, there wouldn't be $522.4 billion worth of sales. But I digress. You've probably heard me say that every week anyway. So moving on. For those of you who value your wealth in shiny yellow rocks, it will currently cost you 14.3 ounces of gold to purchase just one Bitcoin. That's a little less gold than it would have cost you last week, and not because the price of gold has been moving at all. In fact, the price of gold, it's actually been following the stock market. People used to say that Bitcoin was correlated to the stock market, but Bitcoin's been down the last couple days while the stock market's up. Gold has actually been paralleling the stock market, probably because gold, is mostly traded in paper form. Gold is the reason we have the current fiat currency, the current petrodollar, the current US dollar, fiat dollar that is the global reserve currency. Not because we're on a gold standard, but because gold allowed the creation of fiat currency, because gold is just so hard to use as money, and it's so heavy, it's so hard to transport. It's scarce, it's hard money, but it's easier for people just to put it in a bank deposit box and trade IOUs. And that's obviously what led banks to realize that if people were never cashing their gold in the first place, they could just skip the gold altogether and just use the IOUs. And hence where we are today. But I digress. It will currently cost you 14.3 1-ounce gold coins to purchase just one Bitcoin. And it isn't going to be long it might be 4 months, it might be 5 months, it might be a year. When I say it won't be long, I'm not talking about, it's going to happen next week, but time marches on. It seems like just yesterday we were going into the 2020 having the lockdowns. All that hysteria seems a lot more recent than it was. Heck, the 1980s seem a lot more recent than they really were. I mean, that was 40 something years ago now. So time flies is what I'm saying. And before you know it, we're going to be talking about Bitcoin in terms of pounds of gold, not ounces of gold. So if you're a gold bug and you're thinking about getting into Bitcoin right now, you can do so for 14.3 ounces per Bitcoin. And of course, you get Bitcoin at the price you deserve. So TikTok next block. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 1,497 large pepperoni pizzas from Papa John's. That is a pizza every day for more than 4 years, 4.1 years to be precise. And that is a heck of a lot of food security for just one Bitcoin, to think that you could feed a family of 4 every day, once a day for more than 4 years for just one Bitcoin. And speaking of Bitcoin and Bitcoin activity, the mempool is looking a little fuller. Well, it's basically about the same as it was last week. Last week, there were 54 blocks worth of transactions pending on Clark Moody's mempool. This week, it's 57, which is exactly where it was 2 weeks ago. So it's been kind of bouncing back and forth between 54 blocks and 57 blocks. So basically the same as it has been for a month or so, but still a lot lower than at the peak of that ordinals and inscriptions hysteria. Along those lines, if you intend to make an on-chain transaction, the fees are a lot cheap. Well, the fees are cheaper, even though the number of pending transactions are the same approximately. The fees for an immediate transaction are actually down about a third. Clark Moody's dashboard fee estimator is estimating that to guarantee your on-chain transaction is included in the very next block, you should pay a fee of 20 sats per VByte, down from 30 sats per VByte last week. They're saying that a fee of 13 sats per VByte will guarantee that your transaction is mined within a day, and that 1 sat per VByte will be mined within a week. Both those numbers are the same as last week. And mempool.space is actually agreeing. Their high priority fee estimator is also 20 sats per VByte. And I want to remind you that right now that's approximately 75 cents in US dollars. And while that is more expensive than when it was less than 25 cents, just a couple of months ago, before the ordinals and transcriptions hysteria anyway, 75 cents to send as much as potentially billions of dollars anywhere in the world instantaneously with settlement within a handful of blocks, settlement in minutes instead of days or months, is pretty damn amazing. Good luck going into Walmart and going to their, what used to be Western Union, their money services, or especially going into Western Union and wiring money to a friend in another country for 75 cents. It is not going to happen. Good luck sending a wire transfer from your bank to a merchant in another country for less than 75 cents, and talk about taking forever to settle. I sent a couple of wire transfers to China many years ago when I was setting up a small business before Bitcoin even existed. And it took more than 30 days for the person I was making the purchase from, the company I was buying from in China, to actually receive that money. And it cost a heck of a lot more than 75 cents. And I wasn't sending a whole lot of money. I mean, one of the purchases was about $10,000 or so. So, I mean, it was a lot of money. It wasn't like I was buying a hamburger, but I wasn't moving millions or billions of dollars. But I digress. Again, that transaction metric that I like to follow, what had been my favorite Bitcoin statistic for most of this podcast, Bitcoin's 24-hour transaction rate has actually declined a little bit, despite the fact the mempool is a little fuller. Currently, the 24-hour transaction rate is averaging 3.5 transactions per second. Last week, it was 3.37 transactions per second. Before Taproot, before ordinals and inscriptions, I used to say, anytime I saw the 24-hour transaction rate above pi, above 3.14 transactions per second, it seemed like Bitcoin price was always going up. Now, that's just an observation I've made, because in the more than 2 years I've been doing this podcast, up until that point, anytime on a Wednesday when we saw transaction volumes above 3.14, the price of Bitcoin had been going up. And right now, the transaction rate is 3.05, and the price has been going down. So maybe we're getting back to that dynamic. Maybe Bitcoin is returning to normal. Maybe the wizards that thought they broke Bitcoin are finally going away. Who knows? In the grand scheme of things, that will all be irrelevant anyway. We can't even really imagine how we'll be using Bitcoin in 10 years and 20 years, or how our ancestors will be using Bitcoin in 100 or 200 years from now. I'd like to think they'll be using Lightning, but we don't know what we don't know. There might be something even better than Lightning that is right around the corner, or a decade around the corner. All I know is that the underlying asset is the most versatile, the hardest, the best form of money that mankind has ever discovered. And I'm excited that we get to be a part of it, because despite the fact Bitcoin's 13 years old and it's not as early as the early days, we are still really early. I mean, until Bitcoin has basically become the global reserve currency or the intergalactic reserve currency, who knows? We're early. Speaking of Bitcoin and Bitcoin mining, we are a little closer to the next mining difficulty adjustment. Last week, we had just had a difficulty adjustment, of a fairly decent one, an increase of 4% in the difficulty to mine the next Bitcoin. We're now 689 blocks from the next difficulty adjustment. That is about 5 days from now. It looks like it's going to be on October 16th. And it was looking like it was going to be a fairly benign difficulty increase last week, but now it's looking like it's going to be an increase of anywhere between 4.87% to 7.1%. 7.1% would be a gigantic increase, not the largest we've seen, but certainly an increase that there's a lot more hash rate on the network. And that is because blocks are currently averaging 9 minutes and 20 seconds. That is zooming. That is significantly faster than the 10 minutes between blocks that the protocol is aiming for, and hence the mining difficulty increase that's looming. In fact, that's the fastest we've seen since all the way back in August. I think August 16th, they were screaming in at 9 minutes and 16 seconds, which is even faster. But in general, they've been a lot closer to that 10-minute mark. And for those of you who don't know, the difficulty to mine the next block, to be awarded the next block reward for finding a block of Bitcoin, is cut in half every 2016 blocks. And theoretically, that's once every 2 weeks. But because hash rate increases or decreases, it ebbs and flows. It's like the price of Bitcoin. It's been trending up and to the right if you zoom out, but sometimes it goes down and sometimes it goes up. And as a result, the difficulty is adjusted to try and aim for a 10-minute average between blocks. And sometimes they get it a little closer than others. Back in August when we saw that 9 minutes and 16 seconds, that was because we had a couple of big difficulty changes because of the miners that were taking themselves offline in Texas because of the heat wave, and they had just gone back online, and that was causing transactions to just come screaming in. But I digress. That is one of the more beautiful things about Bitcoin. That was one of the more genius aspects about Bitcoin, to try and keep Bitcoin consistent. And it's one of the reasons why the miner death spiral FUD that I always talk about is hooey. Real quick before we continue, I want to thank those of you listening in your favorite podcasting 2.0 app, such as Fountain. As you probably know, by listening on your favorite podcasting 2.0 app, you're able to support your favorite podcast through the value for value model, where you can do so in one of two ways. You can stream your favorite podcasts, a sats per minute, basically, contribution, or you can smash boost your favorite podcast, which is a one-time tip that's basically, it's a message that's sent as a Lightning transaction, so you can give a shout out and support your favorite podcast. And we do have one shout out to read, and that is from longtime supporter Leggy, who sent us 3,800 sats, and actually sounds like they're being apologetic here. Says, thanks, parentheses, 4K was what's left on my wallet here. Well, thank you, Leggy. If that was meant to be apologetic for only sending 3,800 sats, by all means, don't be. Thank you. Thank you. Leggy's been a fantastic supporter of this podcast. Besides the fact that he's sent us sats almost every episode for the longest time, it's really cool to know you're out there. And he reached out to us a couple of times and has given us some advice. Let us know how to say how to greet someone in Luxembourg, for example, which we'll get into here in just a second. And speaking of which, our geographic distribution of listeners, our listenership, has remained exactly the same. It has not changed since September 20th. The top 10 countries for listenership are as follows. Number 1 is the United States, so thank you to those of you listening in the United States. Number 2 is still Argentina, so muchas gracias amigos in Argentina. Number 3 remains Germany, so Dankeschön, mein Freund im Deutschland. Number 4 remains Luxembourg, again, Dankeschön, mein Freund im Luxembourg, or as Leggy taught us, Morien in Luxembourgish. Number 5 remains Canada, so thank you to those of you in the 51st state. Thank you to those of you in the soon-to-be frozen Great White North. Number 6 remains Spain, so muchas gracias amigos en España. Number 7 remains Colombia, again, muchas gracias amigos in Colombia. Number 8 is Sweden, where still nobody's reached out to let me know how to say hello or thank you in Swedish, but thank you to those of you listening in Sweden. Number 9 remains Singapore, where once again I apologize that I don't know a customary greeting for those of you listening in Singapore, and I'm not asking for a boost from those of you in Singapore and Sweden. You can DM me on Twitter at BTC Bulletin Pod and let me know the proper greeting if I were addressing you in Sweden or Singapore. And number 10 remains Venezuela. So again, muchas gracias amigos in Venezuela. And thank you to those of you listening from wherever you're listening, because there are, those statistics continue. I only read the top 10 countries because, it breaks down into 1% or fractions of a percent of our listenerships. And that's where the ebb and flow, the movement and the change and where listeners are from changes up the most. But we have listeners in almost every country in the world, and that is really, really flattering. So thank you to all of you for listening, even those of you who haven't reached out to us to say hello. And again, you can do so for free. You don't have to send us a boost. You can DM me on Twitter at BTC Bulletin Pod, or X, whatever you prefer to call it. Or you can send me an email. Our email is bitcoinbulletin@protonmail.com, because I would like to hear from you. Don't be shy. Feel free to let me know what you think, the good, the bad, and the ugly, whether you love the show, whether you hate the show, what you love about the show, what you hate about the show, suggestions for what you'd like to see the show discuss. I like to hear from you. And I've said this before. You are why I do this podcast. I've been stacking since well before I started this podcast, but I want to provide what I hope is quality content out there for Bitcoiners. To some extent, I want to kind of follow in the footsteps of Adam Meister at TechBalt a little bit, where, he did his One Bitcoin show where he gave basically daily affirmations to help people hold those strong hands, especially in a time right now during the crab market, during the accumulation phase, where it seems like, sometimes even the seasoned veterans start getting a little doubt, start letting some of that FUD creep in. And it's just nice to have someone there. It was really nice to have Adam there every day, just saying, hey, we're one day closer to an all-time high, and some of his other strong hands, long-term thinking type slogans that he would remind us of. So to some extent, that's why I'm here. And also, I want to help you orange pill your friends and family. Maybe I will bring up something that you haven't heard about, a piece of news, or maybe something new about the technology behind Bitcoin that you can help to not just keep your hands, rock solid, but maybe help orange pill a friend or family member. Of course, the crab market is the absolute hardest time to orange pill family members and friends, and that is really unfortunate, because it's the best time, in my opinion, to start accumulating before the bull run kicks off. Because, it seems like everybody wants to swallow the orange pill after Bitcoin is blasted through its previous all-time high. It was really easy to convince your friends to buy Bitcoin when it was $60,000 per coin. But, if they'd purchased when it was 15,000 a couple of months ago, that, or even now at 25,000, that's when they're going to, feel the reward, the feeling of vindication that they're going to feel one day when Bitcoin is, the global reserve currency and worth who knows what in terms of current fiat value. But, in the short term, everybody always says you need to hold Bitcoin for at least one cycle. And I say you need to hold it basically forever, but really a minimum of one cycle, because unfortunately most people don't buy at the low. They buy in the hype, and then Bitcoin does its thing and it goes down, and it's really, really tough on them to ride out that cycle without selling when they're looking at, a loss of half of their, what they look at as half of their investment value. Of course, one Bitcoin always equals one Bitcoin. They still have the same number of Satoshis they purchased. But human nature is they look at it in dollar terms or euro terms or peso terms, and they tend to get downhearted. So I'm rambling a bit here, but this is the time, this is the most important time to help orange pill your friends and family when they can see the immediate benefit of the next halving cycle, the up and to the right, as opposed to having to tough out the next cycle's bull run, the next cycle's crab market when they're down 50% or so. As I said right before the stats, this cycle that is coming to an end and has had its fair, it's had its fair share of black swans. It's almost silly to even use the term black swan because there's so many of them, and a black swan should be a not just something you couldn't have seen coming, but a once in a generation type event. And let's not forget, we had the Luna debacle, the Celsius debacle, the BlockFi debacle, and then the granddaddy of them all, the FTX scam. Those were all huge hits to the psyche of the Bitcoin community, huge black eyes for, Bitcoin in terms of the eyes of the normie crowd. They followed they caused basically huge price drops because of algorithmic trading, basically liquidations, etc. People that deserve to get wrecked for being degenerate gamblers mostly, but when those longs and shorts get liquidated, you get those cascading price drops, and we sure had a heck of a price drop after the FTX bankruptcy. Well, the FTX debacle is front and center again this week as the SBF trial continues. Despite the media simping for SBF all last week, as you remember, I spoke about the news stories talking about how, basically trying to portray Sam in this great light as this gentle giant of an intellectual that, he had a great idea, and the only reason FTX failed is because of the bank run. And of course, that's all BS, and the trial is laying that completely bare. Today was the second day of Carolyn Ellison's testimony. She was in charge of Alameda, the hedge fund that was basically taking all of the FTX customers' money and gambling it or giving it away, paying bribes to the Chinese officials, as we now know, attempting to influence U.S. politics by making huge political donations, buying naming rights to sports stadiums, etc., all with customer money. And now from Carolyn's testimony, we even know that SBF had even wargamed how it would all collapse one day, and his predictions were that it would happen in a manner that mirrored exactly what would eventually happen. I have a hard time believing he set this whole scam up knowing it would come crumbling down, because that's just really hard to fathom. I mean, why anybody would set out to go get arrested, basically. I honestly think that I have a lot of experience dealing with manipulative individuals, a lot of criminals that my experience tells me that regardless of how smart or dumb they are, one theme ran through all of them, and that is they always thought that they were smarter than you, or that they could talk their way out of getting charged with a crime or having to answer for a crime. It's why you see serial killers want to represent themselves in court, because they don't think they need an attorney. They think they're the smartest person in the room, and they're going to be able to convince everybody that they're innocent, talk their way out of horrific, heinous crimes. And to some extent, I think that was probably the case with SBF. I think he wargamed the collapse so he could help plot a strategy on how to get out of it if it did. And we saw that with his political donations and with his testimony before Congress, where he was basically asking for Congress to erect a wall and make it difficult for new exchanges to get into the game, to where basically he would be protected. There couldn't be a bank run on his pyramid scheme because there wouldn't be anywhere to go. He was trying to set up a moat, trying to set up a walled garden like Facebook and the tech giants are trying to do, or even like Walmart does. You often see the news reporting that there's some new Consumer Protection Act, and Walmart and these big retailers are all for it, and therefore it must be good. It must be great for the little guy, right? And that's complete BS. The reason these big companies are for regulation is because they're big companies. Regulation means nothing to them. They have a building full of attorneys and accountants somewhere. So to apply with, to comply with new regulation is just another day in the office for them. But if you're trying to start a new corner grocery store that might one day turn into a Whole Foods, or a store that might one day want to compete with Walmart, you don't even have to want to be as large as Walmart. If you just wanted to sell custom shoes, you're competing with Walmart because they're so cheap. They used to be open 24 hours a day prior to the lockdowns. And just the convenience and the cheapness factor of cheap crap on demand was putting quality mom and pop shops out of business left and right. And that is why they wanted regulation. And it's why FTX and why Sam Bankman-Fried were simping, we're campaigning for regulation. We're basically bribing politicians to create regulation that they knew would give them an advantage. Oh, but I digress. All right, I'm only going to touch on the horrific events that happened in Israel because, naturally there are those who are using it to attack Bitcoin. Social media is already just horrifically conflicted with people upset about what happened to Israel, or upset about you have libertarians who are or not necessarily even people that are drawing a moral equivalency between Israel and Gaza, but people are saying, well, just because what happened in Israel, we don't want to see more innocent people killed, and everybody has their point, and I'm not for a minute going to minimize what happened to Israel. I just think other people have said it better than I could say it, and I want to try and keep this podcast focused on Bitcoin because it's a Bitcoin podcast. Unfortunately, this Israel thing touches on Bitcoin because people are already trying to turn this to a political advantage to attack Bitcoin. The Wall Street Journal, for example, has the article titled "Hamas Militants Behind Israel Attack Raised Millions in Crypto." The disgusting article continues, Hamas's lightning strike on Israel last weekend has raised the question of how the group financed the surprise operation. One answer, cryptocurrency. Okay, as usual, this is utter nonsense. And as usual, the utter nonsense is projection, because it isn't Bitcoiners that financed any of the terror attack on Israel. For example, according to the United States government's own numbers, according to the State Department's humanitarian arm, the U.S. Agency for International Development, the United States has given Gaza more than $400 million on various development projects in the Hamas-controlled territory since 2009. An article in freebeacon.com expands upon this. When President Joe Biden took office in 2021, the United States began pumping millions into the Palestinian territories, including the Gaza Strip. America has spent at least $5.5 million in Gaza that year alone. In mid-2022, the article continues, the Biden administration announced an additional $316 million aid package for the Palestinians, including projects in the Gaza Strip. And between 2021 and 2024, the Biden administration is slated to spend, and this is I guess this is a running tally because it was looking at funding that will continue through next year, but the article continues, the Biden administration is slated to spend over $500 million in programming to support the Palestinian people. So that $400 million figure, they're planning on spending $500 million in addition to the $316 million that they've already spent. And least we not forget that on 9/11 of all days, the Biden administration gave Iran $9 billion. And we all know, in fact, they've taken credit for being Hamas's primary funding source on numerous occasions. And many people feel this is all about trying to drag the United States into another proxy war, a war between Iran and Israel. And again, I don't want to talk about the disgusting things that happened. But what I do want to say is, F you, Wall Street Journal, for trying to make this about Bitcoin. They say cryptocurrency, but we know what they're talking about. They want to they say cryptocurrency on purpose. They don't say Bitcoin because they know cryptocurrency is a smear. They know that's Bitcoin. They know it's Bitcoin, not crypto. They know Bitcoin is the only non-scam out there. They know everything else is just an S-coin. But by lumping Bitcoin in, that's part of their takedown smear. The smear campaign against Bitcoin. So screw you, Wall Street Journal. Screw you to any of the politicians who want to politicize death and destruction. And screw you for trying to use it to further oppress people by trying to take away their right to transact freely through Bitcoin, or as they refer, cryptocurrency. And that's all I'm going to say about that, to quote Forrest Gump. But we are going to continue along the FUD narrative because I've mentioned the looming minor death spiral FUD that you're going to have shoved down your throat as we get closer to the halving. Every time there's a halving, the FUD spinners the FUDsters come out of the woodwork and say, this time, this is going to kill Bitcoin, because by cutting the miner reward in half, you're going to bankrupt all the miners, and that's going to slow the block time down, and that's going to make the miners even more unprofitable, and that's going to bankrupt even more miners, and Bitcoin's going to grind to a halt, and that's going to be the end of it. And this BS has been proven wrong every halving. Every halving, they've trotted this out, especially at the last halving, and of course it didn't come true. And one of the reasons it won't come true is because miners are not idiots. They know that the halving is coming. And this time around, one thing that is different is companies like Riot, for example, by entering into those agreements with ERCOT, those power sharing agreements where they agreed to turn off in exchange for energy credits when demand was high, their demand response agreements. It has been reported that Riot has enough energy credits from shutting down to help out the Texas energy grid that they basically won't have to pay for any electricity at all in 2024, or at least the first half of 2024. So, for example, even though, or to make this crystal clear, even though the price of Bitcoin, or not the price of Bitcoin, the reward in Bitcoin that Riot will be receiving will be cut in half, their energy costs basically are going to be free for the first half or the first part of next year because of those energy credits. So they're going to be mining Bitcoin essentially for free. And so that is something that's absolutely genius. They helped the people of Texas out. They prevented blackouts. They prevented, the situation we had a couple years ago during the ice storms where Texas was without power for weeks. People were freezing to death in Texas of all places. And they've allowed they've allowed excess capacity to come online and to be there when it's needed, and by shutting off, allowing that power to go, prevent blackouts. And that's fantastic, but it's also another way miners are going to help survive the halving. Of course, the other way that miners survive the halving is because shortly after the halving, Bitcoin sets a new all-time high. So, for example, during the 2020 halving, going into the halving, Bitcoin is worth about $10,000. So when the miner reward was cut in half, let's say let's say you had $10,000 of the Bitcoin as the reward, and that's an oversimplification, but let's just say that number was 10,000. Because the reward was cut in half, they would now have $5,000. And of course they didn't. They went from 6.5 Bitcoin to 3.25 Bitcoin. But just to keep it simple, let's say they went from $10,000 in rewards to $5,000 in rewards. But then Bitcoin went up to $60,000, which was 6x. So if you 6x $5,000, all of a sudden their reward was effectively $30,000, which, as you know, is more than $10,000. So after just a couple of months, less than a year, all of a sudden, not only were they still profitable, they were more profitable. They were making record profits. All this is to say is I believe the powers that be know they cannot stop Bitcoin, but they think they can manipulate it, or at least they think they can manipulate you. They know that Bitcoin runs in these 4-year cycles, these demand shock cycles, and I believe, at least some people in power believe, that if they can just knock the top off the bull run a little, if once every 4 years when Bitcoin's getting ready to go on that euphoric phase, if they can just FUD you a little bit, if they can have just one black swan type event that they can hype on, that they can use to nip the top off to keep Bitcoin from launching into the stratosphere, that they can at least delay the inevitable, or that they can, maybe they're even so deluded to think that they can actually even prevent hyper-Bitcoinization altogether. And I think that's what they're doing with part of what they're doing with the miner death spiral FUD. And they're already setting us up for this. I think they're setting us up that for like the day after, maybe even hours after the halving occurs, they're going to be trotting out the headlines. See, the halving cycle theory is dead, when the price of Bitcoin doesn't immediately soar after the halving. They're basically paving the way with the looming recession means that this time is different, with all these FUD articles for why this time is different, all these FUD articles for why they say there's not going to be a bull run inspired by the halving. And so the second the halving occurs, they're going to be trotting out the "see, I told you so," fully knowing that the bull run doesn't kick off for 6 months to a year after the halving. In fact, usually after the halving, the price dips a little bit, and that's probably because they convince people that the price is going to just immediately springboard to a new all-time high on the day of the halving. Naturally, that doesn't happen. Price discovery, the free market, it takes time to settle on the fair value of a good or a service. And so just because you cut the supply in half doesn't mean, that isn't going to take time. And traditionally that takes 6 months to a year. For example, we didn't breach the previous all-time high until about December 20th of 2020. And that's when Bitcoin, it was kind of funny because previous to the 2020 halving, Bitcoin's all-time high, it's been rounded up to 20,000. It was really in the teens, but a lot of people just say $20,000. So The first time it passed $20,000 was on December 20th. And then the next day on December 21st, it was 21. And then on the 22nd, it was the 22. And the 23rd, it was 23. And on Christmas, it was 25,000. And that was particularly amusing because like the price was corresponding to the day of the month almost. And so that's one of the reasons I remember it so vividly. But, Bitcoin didn't set a new all-time high until till 6 or 7 months after the halving, and it didn't set its ultimate all-time high for more than a year after the halving, and that's just the way it works. So don't expect a new all-time high in April of 2024. Don't expect to eclipse the previous all-time high until maybe the fall of 2024, Thanksgiving or Christmas of 2024. In my opinion, if Bitcoin's price history repeats or rhymes, we won't break $69,000 until sometime around Thanksgiving or Christmas of 2024, maybe even later, and that's just normal. If the people that have made the predictions that Bitcoin will be worth 100,000 or 50,000 or whatever by 50,000 by the end of this year, or 100,000 by the halving come true, then that is when this time is different, and then who knows? Maybe this time will be different, and maybe we will launch out of the 4-year cycle into the super cycle. I don't think that's going to be the case. Every year is a little different. Even twins are a little different. No two children are the same. No two bull runs are the same. No two historical events are the same. So, of course, there will be variations, and I fully expect that to continue as long as there is a halving. I'd be happy to be proven wrong. I would be happy to see hyper-Bitcoinization completely get rid of the 4-year cycle. But even during an early adoption of the hyper-Bitcoinization, let's say we achieve hyper-Bitcoinization in 2030, well before the last halving, even if the whole world is using Bitcoin, if the supply of Bitcoin that's on the markets, the ability of you to get Bitcoin to use on a day-to-day basis is cut in half, that's going to affect the price of Bitcoin. All right. Last word on the FUD is that Bitcoin is unstoppable. Regardless of what you hear, regardless of what they say to try and scare you, I believe Bitcoin is inevitable. Bitcoin, if you zoom out, is always up and to the right. And I think they know it. I think they're just trying to delay the inevitable. Congress, for example, won't pass a budget. They won't balance the budget in the United States. And they know their pet programs will collapse one day. They know they're driving the country into the ground. And they're not doing anything about it because that one day is far enough down the line, they don't care. I think they're doing the same thing with Bitcoin FUD. I think they're just trying to kick that can down the road, hold on to their power as long as they can to enrich themselves, because that's ultimately what it's all about when it comes to politicians. Speaking of fiat and the economy, the news that's affecting the markets most right now, even above and beyond the looming war in the Middle East, is that PPI, the Producer Price Index, came out higher than expected. But markets still went up because everyone is expecting CPI to come out lower than expected. Well, let me explain what the difference is to you. PPI is producer price inflation. That comes before consumer price inflation, which is CPI. That is because PPI is the cost to make the goods and the things that you purchase. And if it's getting more expensive for people to manufacture the goods that you're going to purchase, eventually those costs get passed along. If it's more expensive for McDonald's to sell you a Big Mac, they don't necessarily increase the price right away, but eventually it's coming. And so PPI is a leading indicator of inflation, and both those numbers are complete fiction anyway. But for people to be reveling that, like Paul Krugman, the moron that was touting the end of inflation just last week with his cockamamie term, long transitory. See, I told you inflation was transitory. It was just long transitory. The rising PPI is proof that is not the case, that inflation is here to stay. If you're old enough to remember the 1970s, and I don't really remember the 1970s, but let's just say that inflation took a decade, and it wasn't that inflation kept going up. The inflation number wasn't just a steady increase for 10 years. No, inflation ebbed and flowed, but the consistent thing was it was always there. Prices never got cheaper. They just stopped increasing in price for a little bit, and then they would have another surge, and then they would have another surge, and there were a lot of parallels between now and what was happening in the 1970s. Back then we had President Jimmy Carter, who was in some ways almost a spitting image of the president we have in office now, although Jimmy Carter didn't have dementia and at least knew who he was. I like to say the difference between Jimmy Carter and Joe Biden is that Jimmy Carter was genuinely a nice guy. He was an idiot, but he was actually a genuinely nice person. And that's the difference between Jimmy Carter and Joe Biden. Nobody's ever called Joe Biden a genuinely nice guy. All right, on to why we're here. And that is because, once again, today is Wednesday, and that is DCA Wednesday. And what is DCA Wednesday, you might ask? Well, DCA is short for dollar cost averaging. And dollar cost averaging is, I just thought of one more thing that I wanted to bring up before I get into our DCA stack. There is some interesting news out there that just broke within the last day, or at least it's just been widely circulated within the last day. And I'm not really super well versed on the specifics about it, but you may have heard about BitVM. And BitVM is basically Robin Linus's attempt to bring smart contracts to Bitcoin, to bring Ethereum style technology to Bitcoin. He claims he can do it without even a soft fork. I don't care. This is neither a good thing nor a bad thing for Bitcoin. Do what you want to do on Bitcoin as long as you don't change it. Bitcoin's use case is not to be a world computer. Bitcoin does not need to compete with Ethereum. Bitcoin's use case, well, it's Satoshi Nakamoto said it in the beginning of the white paper, where he entitled it a peer-to-peer electronic currency, and that's Bitcoin's use case. It's freedom money. It's unstoppable, uncensorable, unconfiscatable, unincorruptible, inflation-resistant money, and that's all it is. So if you want to play around with smart contracts, knock yourself out, as long as you don't try and change the code to do it. Ultimately, I don't think it has anything to do with Bitcoin's use case, which is to be the reserve currency of the world one day. Whether it's electronic gold, whether just banks are trading it and we're trading on second layers, whatever happens, that's Bitcoin's value proposition. All this other stuff is just noise. But I don't know enough about the specifics about what they plan on doing and whether they can really do it without trying to fork the technology. If they can do it without so much as a soft fork, then knock yourselves out, guys. Maybe something cool will come out of it, but it has nothing to do with Bitcoin's core value proposition. All right, back to our DCA stack. As I mentioned, DCA is short for dollar cost averaging, which is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 116th stack. We've been doing this for more than 2 years. We started investing our equal portion, which was $20, at a regular interval, which was every Wednesday, all the way back on Wednesday, July 28th, 2021. And so far, stacking just $20 worth of fiat at a time, we've stacked a total of $2,300 worth of US dollars, including $51.75 in fees. And that has accumulated us a stack of 7.9 million Bitcoin, more than 7.9 billion Bitcoin, 7.9 million Bitcoin. Holy cow. That was a slip up. Wow. There's only 21 million Bitcoin that ever going to exist. 7.9 million sats, 7,989,489 sats. Currently we're underwater on that a little bit, where our average purchase price has now been $28,788. So we've if you wanted to sell, if you wanted to panic sell, you do so at a tiny bit of a loss right now. But the upside is, there are two upsides to this. First of all, is we built that 7.9 million stack of sats $20 at a time. So for those of you out there on Reddit or Twitter asking if, I only have $20, I only have $50, I only have $1,000, is it too little? Is it too little, too late? You're not too late. It's not too little. Get off zero, investing just $20 of US fiat a week into Satoshis. We've built a stack that will one day be probably more than the average middle-class person in the world could afford. It's going to be a decent stack of Bitcoin at only $20 a week. And even though our average purchase price is $28,788, had we YOLO'd in, our average purchase price would be $39,716. We'd have more than 2 million fewer sats. In fact, we'd have like 2,200,000 fewer sats. And that stack is, if Bitcoin goes to $1 million one day, would be worth more than 79,000 US dollars. And that's a heck of a lot more than the $500 or less that the average American has in savings. So To that end, I think that experiment has been a success. To continue the experiment, we're going to use the Cash App. Cash App is not a sponsor of the show, but I've used the Cash App all 115 stacks because I think it's the easiest way to stack Bitcoin, at least in small amounts. They do charge a fee of about 2.25% to stack your Bitcoin. So if you're going to stack more than $20, if you're going to stack large amounts, if we're talking thousands of dollars, then do your own research. Maybe you'll want to find an exchange that charges you a smaller fee. But if you're stacking small amounts like me, that 2.25% fee is negligible. That's going to work out to about 45 cents. And in exchange for that, Cash App is going to let us transfer our Bitcoin to our hardware wallet without a minor fee. So we're going to spend 45 cents on here or there on a couple of purchases. And then when we have a little bit of a stack, when we move it to our hardware wallet, we're going to do it for free. And that'll save us, that 75 cent or $1.50 or whatever in mining fees. So it all comes out into the wash is what I'm saying. I've got the Cash App open on my phone, and I already have $20 on my Cash App because I also use the Cash App for sending money back and forth to family members. So I already have $20, but you don't have to. That's one of the other cool things about Cash App is they'll let you link a bank account or a debit card to Cash App and buy and transfer your Bitcoin immediately. Something else most exchanges don't let you do. If they let you transfer money immediately, they won't let you buy Bitcoin and then send it to your hardware wallet right away, or they won't let you buy Bitcoin at all for a week or so until that money is settled. All this is to say, do your own research. You do you. Cash App might not even be available where you are. If it is, however, there is a referral code in the show notes. And I believe the current offer is if you use that referral code, you'll get $5 for free for signing up. And the podcast will get $5 for that referral as well. So you can help support the podcast and actually get paid to do so. Instead of boosting us, you can tip us $5 for free by signing up for Cash App. There's some other referral codes in the show notes as well. None of those are sponsors. Everybody that uses those services gets their own referral codes. So they are not sponsors of the show and they do not exert any influence over me. But if they're services that you might be interested in using and you want to help support the podcast, you can do so by clicking on the referral link and actually get paid to help support one of your hopefully favorite podcasts. All right, as I mentioned, I've got the Cash App open. I'm clicked on the Bitcoin icon I've clicked on Bitcoin and I have $20 preloaded, and I'm going to tap on buy. Manually enter $20 because sometimes that's one of the choices you can just tap on, but sometimes it is not. Right now it would be 25 and we're going to be consistent, right? So entering $20, tap and confirm. And boom, just like that, we purchased another 73,025 Satoshis. And that makes me really happy. To harken back to the argument on Twitter, or the discussion on Twitter, on X, that I was involved in. I really am excited when the price of Bitcoin is down because we just purchased 3,000 sats more than we purchased last week for the same amount of fiat. And if Bitcoin had gone up, if Bitcoin had kept going up and to the right, if Bitcoin is worth $100,000 by the halving, we're going to stack a lot fewer sats before that new all-time high. And the goal is not to have a fiat equivalent. The goal is to have more sats. And now we have 73,000 more sats for just $20. And that brings our total stack up to over 8 million sats. We've crossed the 8 million sat mark. Our total stack is now 8,062,464 Satoshis. And it also dropped our average purchase price down just a little bit. It shaved $12.68 off that average purchase price. So our average cost basis now is $28,775.32 for those of you who care. Yes, that's worth, that's more than what the US dollar value of Bitcoin is currently worth, but significantly less than what it will be when we just retake that all-time high. And when hyper-Bitcoinization hits one day, right now people say, I wish I could have bought some of that $3,000 Bitcoin, or I wish I could have bought some of that $1,000 Bitcoin, or that $5 Bitcoin, or that $1 Bitcoin. One day people are going to be calling you lucky for having purchased at an average purchase price of only $28,775. And if Bitcoin doesn't even hit hyper-Bitcoinization, if it just, let's say the $1 million mark is your moon, if Bitcoin does hit $1 million, that stack would be worth $80,624.64. And if you're Michael Saylor, that might mean nothing to you. That might be lunch at a super fancy restaurant, or a gasoline for your yacht. But for the average person out there, even for the average American or the average European, the average person living in a wealthy country, $80,624 sitting in your savings account somewhere would be life-changing for a lot of people. And for the billions of people around the world that don't live in the luxury that you live in the United States or Europe or other developed nations, $80,000 would be unfathomably rich. Maybe not billionaire status, but enough to live off of for the rest of their lives. And that's just the tip of the iceberg, because we're going to keep adding to that stack as long as people are willing to send us Satoshis. And hopefully they were willing to sell us Satoshis for under Adam Back's $100,000 per Bitcoin estimate, at least until the halving or 6 months after the halving or longer. And before I go, again, I know I've already asked you to reach out and follow us on Twitter, but on Twitter or X, reminder, we are at BTC Bulletin Pod. Even if you don't want to DM me and tell me what you think about the podcast, please consider following us on Twitter, because we are not a blue checkmark. We do not subscribe to Twitter. And, even more so than ever before, Twitter is starting to throttle people that are not subscribers, that are not paying to play. And one way around that is to have subscribers. And the more subscribers we have, the more influence we can have. And hopefully the more orange citizens we can bring, the more people we can help orange pill, and the more people we can help accumulate Bitcoin before ultimately everyone has to start using Bitcoin because they have no choice. But you want to be one of those people that got in before that point. Again, everybody gets Bitcoin at the price they deserve, but we want to help people get it at the lowest price possible. And you can help us do so by following us on Twitter. Either way, we will see you next Wednesday and every Wednesday while we grow that stack of Satoshis together. Until that time, keep on stacking those sats, you sexy sat stackers.